Most accounting firms start with a single anchor, usually tax preparation. But as you scale, you inevitably add new revenue streams, advisory, audit, and bookkeeping. Immediately, your operations hit a wall. Each of these new service lines operates on entirely different logic. Tax follows a strict linear path dictated by IRS deadlines, while audit requires phased fieldwork, and bookkeeping cycles monthly. The financial mechanics clash just as hard. Tax partners track profitability down to the 6-minute billable increment, but advisory and bookkeeping engagements rely heavily on fixed fee or monthly retainer models. This decision tree maps out the multi-service breaking point. You can see the clean path of a single service firm running through a simple CRM. But when you force these diverse services into legacy software built only for tax, the structure fractures into a tangled web of disconnected nodes. Standard workflows break down entirely. As red flags appear across these intersections, staff inevitably create dangerous workarounds, tracking advisory deliverables in spreadsheets, or missing compliance deadlines because the system wasn't built to monitor them. The result is massive data silos. Partners lose visibility into true firm capacity, staff are overallocated, and you forfeit obvious cross-selling opportunities simply because the tax team has no idea what the bookkeeping team is doing. Before looking at a single software vendor, you have to choose between two opposing architectural strategies: all-in-one rigidity versus best-in-class fragmentation. The all-in-one approach prioritizes a unified client view above all else. You use a single platform that handles time tracking, billing, and document storage, but you sacrifice high-end, specialized functionality for your newer service lines. The best-in-class approach does the exact opposite. You deploy highly specialized tools designed specifically for each service line, but you have to accept the daily friction of managing a highly fragmented tech stack. There is no universal right answer, but choosing the approach that conflicts with your firm's specific size and service mix guarantees wasted capital and severe staff burnout. To find your fit, we are going to evaluate 3 distinct firm segments and map out the exact software strategy required for each. The goal here is total visibility. You need a setup that tracks every client interaction, from onboarding to invoice, giving partners the data they need to make accurate capacity decisions. Let's start with small to mid-size firms. We're talking 1 to 20 staff members, still heavily anchored in tax preparation, but beginning to dabble in new services. This comparison matrix evaluates platform performance across different firm sizes. For this first group, the clear solution category is the all-in-one platform, like Canopy or TaxDome. These systems require very little configuration. They provide out-of-the-box readiness, built-in billing, and a consolidated client portal from day one. The immediate payoff is operational simplicity. Your staff only need a single login to manage their day, and your clients have a single, unified destination to upload documents and pay invoices. But there is a severe trade-off. Because these platforms are built around tax preparation, their templates enforce rigid, linear steps. When you try to map non-linear advisory tasks or heavily phased audit workflows into these tax-first templates, it creates heavy administrative friction. The software expects a simple review and file step, where you need dynamic, multi-stage approvals. For a firm of under 20 people, accepting that workflow rigidity is a smart compromise. The alternative is managing complex API integrations across multiple tools, which small firms simply do not have the overhead to support. Next, we look at the mid-market. These are process-driven firms with 10 to 50 staff members, aggressively expanding their advisory practices or taking on heavy bookkeeping volume. Firms at this scale quickly outgrow all-in-one tools. They require deep capacity planning overlays to see who is overallocated, and highly flexible templates that can handle intricate deliverables. If we shift our view on the matrix to the mid-market tier, the strategy flips. The solution here is deploying a practice management overlay, like Carbon. An overlay gives you exact control over the process. You get highly customized task lists, distinct approval chains per service line, and a cross-service timeline that shows every client interaction in one place. To get that flexibility, you must accept a heavy operational cost. You have to integrate external billing platforms and specialized tax tools, leaving you with a heavily fragmented tech stack. The operational reality for your staff changes entirely. To do their jobs, they are forced to navigate 4 to 6 different web applications simultaneously, every single day. That friction builds up fast.
It causes severe login fatigue, aggressive session timeouts mid-task, and the constant, very real risk of entering financial data into the wrong client's instance. Mid-market firms absolutely need these best-in-class workflows to scale, but to survive the setup, you have to mitigate the daily friction caused by constantly switching between disconnected platforms. We resolve this friction using a technical standard called browser isolation. Instead of fighting with shared cache data, you create secure, independent digital environments. Platforms like Sendwin use multi-session isolation to keep every single software instance alive simultaneously, without them bleeding into one another. This browser diagram illustrates the functional outcome. A staff member can move from their tax software to their audit platform and into their bookkeeping dashboard seamlessly, without ever re-authenticating or refreshing a timed-out session. For client management, this solves a massive headache. You can log into multiple client instances of QuickBooks or Xero concurrently, segmenting the data completely so there is zero risk of session interference. The trade-off is straightforward. Deploying browser isolation adds a small, per-user monthly software cost to your overhead, but the math easily justifies the expense. You are paying a slight premium to directly reclaim hundreds of non-billable hours that your staff previously lost to daily platform login friction. Finally, we reach the enterprise tier, firms with 50-plus staff members operating across massive, deeply siloed departments. At this scale, you leave overlays behind and adopt enterprise-grade, module-based systems like Thomson Reuters Practice CS. These systems deliver unmatched granular control. They offer complex multi-rate time tracking and automatically monitor service line-specific compliance requirements across thousands of engagements. The cost of that control is steep. These platforms carry enormous price tags, punishing learning curves, and usually require a dedicated IT team just to keep them configured correctly. Enterprise systems provide absolute control and deep reporting, but they sacrifice all agility, making them massive overkill for any firm that doesn't have dedicated operations personnel on payroll. Selecting the right software is only 20% of the battle. Your execution determines whether the system actually works. This Gantt chart breaks down a 6-week implementation blueprint. The timeline reveals one obvious fact. The initial phases are notoriously dangerous for burning out staff. During Week 1's service line definition, partners must formally define exact workflows on paper before touching the new software. In Weeks 2 and 3, every task list, document requirement, and approval chain must be manually built into the system. This requires a severe upfront commitment. Partners have to dedicate significant non-billable hours during these phases to ensure the logic holds up. Skipping these high-effort steps guarantees poor staff adoption. Without accurate baseline data, those expensive capacity planning dashboards you just bought will be entirely useless. The primary rule of software buying is simple. Do not purchase based on a feature list. Purchase based on your firm's operational maturity and actual revenue drivers. If you are a 1 to 20 person firm focused heavily on tax, choose an all-in-one platform. Accept the minor workflow rigidity in exchange for out-of-the-box readiness. For a 20-plus person firm scaling an advisory practice, choose a practice management overlay and pair it with specialized tools. To make that mid-market strategy work, you must commit to rigorous API integrations and employ browser isolation tools like Sendwin to keep your fragmented tech stack functional for your staff. Software will never fix a broken internal process. Standardize your operations on paper first, or you risk spending capital simply to automate your own chaos.